Training nights. You can see time is around 10:25. Let's look into today's monthly expiry, Nifty 50 as well as Bank Nifty trade analysis. Guys. You can see the market swept this high of yesterday's. You can see this sweep of high, and what we need to see here is that the market breaking and closing above this high. Next target is this high. The market gapped up and stayed above this high. The next target is above this high, guys, and you can see the market again swept this high and closed below this range. So what you can see is that bearishness, and the next target what you could have looked for is this low over here. This is how usually the market behaves. So I hope you're understanding, guys, what I'm saying. Like, let me explain to you further. What we need to see is that in case if the market breaks above this high and closes between this range, guys, what we need to see is to look at the close of the candle. You can see the market broke, swept this high and closed within this range. So for the next day, we should look for this low, and you can see the market came, swept this low, and closed below this range. So for the next day, we should look for this low. And here you can see the market swept this low and closed within this range of previous candle. You can see. And what we could look for is the high of this candle. And on this day, you can see the market swept this high. Yesterday's high over here, you can see. Swept this yesterday's high and closed below within this range, guys. So what we need to look for is the low of this candle. And you can see the market rejecting price and even closing below. So for the next day, what you could have looked for is the low of this candle. But you can see here is where the market changed the sentiment. After rejection of price and closing this below, what you could have expected is that the market would form another bearish candle like this over here. Instead, the market formed an insider candle, guys. This is an insider candle where market failed to either sweep towards the upside nor sweep towards the downside. So this is an insider candle. So after this candle formation, you can see this is a bullish candle. So you could have looked for sweeping towards the upside. So the market swept this. And for the next day also, you could see, you could have expected the market to sweep this high. You can see the market swept this high and closed below this range over here. So for the next day, you could look for this low or even this low. You can see you could have targeted even this low. So the market came all the way to this level. And after this kind of huge bearish momentum, you can see the market on the next day, guys, came and broke and closed above this level over here. So for the next day, what you could have looked for is this candle high. But you can see the market here formed a bearish candle over here. So what you could have looked for is this low over here. After this kind of bearish candle, you can see this is where you could have looked for this low of this candle. But you can see instead the market gapped up here and closed above this range, clearly indicating bullishness. So from here on, you could have just hold it on to your trade, guys. I think you're understanding what I'm saying. This is the intraday daily based analysis, guys. Let's look into daily trade analysis in both Nifty as well as Bank Nifty, as today is expiry day as well. So what you can see here is that in a daily time frame analysis, which I have already mentioned to you, in the market sweeping yesterday's high and closing below this range. So what you could have targeted is today's low, guys. And after sweeping today's low, you could have expected some kind of momentum. So in a 5-minute time frame, you can see the market sweeping this low and suddenly showing some sort of reaction, indicating some sort of bullishness, guys. Whenever the market sweeping today's low and showing some kind of bullish momentum, that's where you could have entered long position, keeping your stop loss just below that candle, guys. So I hope you understand what I'm saying. Since today is expiry, you could expect some kind of manipulation in market, and the market sweeping yesterday's low and showing some positive momentum, clearly indicating the market targeting all those uh, sellers, guys, who might have entered here. Even though they might have been in profit, there might be new sellers entering the market, and the buyers might have exited their position, seeing this kind of gap up because they might expect the market might continue further selling towards the downside. Since it was an expiry day, you could have expected some kind of manipulation, and you can see this momentum towards the upside. So what you could have taken position is that you can see the rejection of price from the mid of the first candle as well as price closing above the VWAP level, clearly signifying bullishness, guys. You can see if you analyze the same kind of trade analysis here, you can see the market sweeping this low and closing above this range over here. And in the next candle, the market came all the way midway between this, again rejected price from this level and closed above this candle side, clearly indicating bullishness. And you can see you could have either entered your long position here, kept keeping your stop loss just below this candle where the market swept this, guys, and you could have traded it all the way towards the upside. So this is the entry where you could have taken, keeping your stop loss just below that candle, and you could have targeted it all the way towards the upside. So the target levels where you could have targeted is the midpoint of today's pivot levels or yesterday's swing momentum, the 0.38 level of yesterday's retracement guys. So if you consider the daily time frame analysis, and if you see here guys, there was some huge bearish momentum towards the downside here, and you can see the market rejecting from 0.38 level. So that is where you could have exited your position after seeing this kind of huge bullish momentum. So in case if you might have missed out on this trade, guys, like you can see the market immediately after gapping down, sweeping yesterday's low and continuing further bullish momentum. You can see the market heading higher, guys. So in case if you might have missed on that, you can see clearly the market formed a chalk over here, breaking structure towards the downside. This is a clear chalk formation, guys. So you could have expected the market to come all the way to this order block level. You can see this is the last up candle which broke structure towards the downside. So you can see market consolidating all the way in this level itself. Or what you could have considered if you consider this whole swing momentum as a single go. So you could have drawn the fib levels here, the high to low of this candle, and you can see the fib level, 50 level where the market here faced some sort of rejection and price consolidating above the below the 50 levels. But what I have posted you on a live trade analysis is that we can see after this kind of huge selling momentum, the market immediately showed some kind of bullish momentum, and you can see this V-shaped recovery clearly signifying some sort of bullishness. But after that, the market here consolidated in a pattern base. As you can see, this clear pattern consolidation, and the market broke structure towards the upside. And after breaking this structure, you can see again the market consolidated and failed to make a higher high. Instead, the market broke structure towards the downside. You can see this is one failure swing, guys, where the market failed to make a higher high. Instead, broke structure towards the downside here, and changing the market sentiment from here being bullish to bearish, and you can see a clear chalk formation. This is where I have posted you on live trade analysis this momentum, guys. So what I expected is that the market might retrace to the optimum trade entry zone and further continue bearish, guys. So if you consider the common point between this to the common point between this to the common point between this, you can see price retracing back all the way to this optimum trade entry zone over here, the optimum trade entry zone over here. You can see the price rejecting all the way to this optimum trade entry zone. And if you mark here, guys, this is the optimum trade entry. So this is where I have told you to take short position, keeping your stop loss just above this candle itself. And the order block level is this order block level, guys. This is the last up candle, which broke structure towards the downside. And this is where the market again retraced all the way to this optimum trade entry, rejected price from these levels and continued all the way towards the downside. So in case if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this. So what you could have targeted is all the way. So like plot it once more, guys. You can see if you try to plot the fib extinction levels of this string momentum, the common point between this to the common point between this to the common point between this. So you could have targeted it all the way to this 1.68 level. I have already posted this trade analysis, some live video, guys. Live trade analysis. If you go watch my bank nifty trade analysis, I have holded it all the way along this zone as well. Even though I saw some rounding bottom pattern clearly showing some sort of demand, even after seeing this kind of rounding bottom pattern, also I just hold it on because I expected some kind of rejection of price from these levels and continuation of price towards the downside. So you can see this is a rounding bottom pattern, clearly indicating some sort of bullishness, guys, and see you get the market heading higher, but again rejected price from these levels and continuing further selling towards the downside. So short position somewhere here, guys, keeping your stop loss just above that candle and targeting it all the way to 1.68 level over here. You can see this is where you could have targeted it. And further, you can see the market after rejecting price from these 1.68 levels, the market further continued in a V-shaped recovery, clearly signifying bullishness, and the market consolidate throughout the day. Yes. See, if you see in a narrow range manner over here, you can see there is no possible entries for you to take here, guys. But what you can see here is that the market came and mitigated this order block. And after mitigating this order block, guys, you can see the market rejected price from these levels. You can see the market all the way higher, took support from 9 as well as 21 moving average, failed to make a higher high. Instead, the market broke structure towards the downside, changing the market sentiment here from being bullish to bearish. and you can see the clear chalk formation. And if you consider this swing momentum over here, guys, the common point between this, the common point between this to the common point between this, you can see the market came all the way to this optimum trade entry zone over here. Or you can consider this another zone also here, guys. You can see this zone over here came all the way to this optimum trade entry zone and rejected price from these levels and continued further. So you could have either entered your short position here, guys, keeping your stop loss just above this candle itself and targeted it all the way towards the downside. And if you case plot the fib extinction levels, the common point between this to the common point between this to the common point between this. So you could have targeted the 1.68 level. So you can see you could have clearly targeted it all the way to 3.6 level over here. You can see, guys, the 3.68 level is where you could have targeted and price going all the way to this levels over here. So this is where you could have targeted. So in case, guys, I have posted you on live trade analysis. So I expected rejection of price from here. So what I've told you is after this price rejection from these levels, I expected the market, and I've told you on live videos also, the market might come all the way to 4.26 level. So in case if I plot that fib extinction levels here, guys, the common point between this to the common point between this to the common point between this. So I have posted the video and live trade analysis, and I have marked you the 3.68 level, guys. You can see the 4.26 level over here, which is in confluence with here the 3.6 level. This is where I've told you guys the market would come exactly at these levels, reject price, target levels. You can see the market aggressively came all the way towards this downward momentum, guys. So I hope you're understanding, guys, why you could expect some kind of momentum towards the upside, again the momentum towards the downside. The overall sentiment is bearish, guys. So the market gapped down and swept the yesterday's low and showed some kind of bullish momentum and aggressively went all the way towards the upside. Further rejected price from this pivot level, so the yesterday's 0.38 level, and again the market consolidated toward the day, and after around like 2:30, the market here shows some kind of momentum towards the downside, guys. So this is about my trade analysis in Bank Nifty, guys. Let's look into Nifty 50 trade analysis. In Nifty 50, what I would always tell you is that here the price action is quite different from Bank Nifty, guys. Since you can see the market here aggressively sold towards the downside, but the upward momentum in Bank Nifty was quite bearish. But you can see how bullish the market towards the upper side was there, and the market showed a very good V-shaped recovery in Bank Nifty, in Nifty 50. But before that, guys, what I need to tell you is that here the narrow zone over here, and this is a wide zone here. Whenever you find a narrow pivot range, usually on that days they would expect some kind of huge momentum like this, guys. And whenever you find a wide pivot range, you can expect some consolidation of price. So be always careful whenever you find the wide pivot ranges, guys. So during the wide pivot ranges, the market will always consolidate. So let's try to decode this trade and analyze how you could have taken this trade as well in today's Nifty 50. So in case if you try to plot this, guys, the 5 minute zone of this candle over here, the first five candles, 5 minute zone. So if you try to plot the levels over here, so let's mark the 5 minute zone over here. So this is the 5 minute zone. So you can see here, guys, the market here showed some kind of bearish momentum, aggressively headed towards the upside. A lot of you can see this kind of momentum less aggressive. There is no price action here itself. You can see why the market trying to head higher, but let's try to decode it, guys. What you can see here is that you can see the market rejecting price from this 200 moving average as well as 9 as well as 21 moving average and breaking the and closing below the first candle, guys. This is a clear break of structure. And if you consider this swing momentum over here, the common point between this to the, so let's consider this swing over here. So this swing over here to this swing over here. So the market here neither came to 0.38 level. So what we need to consider is, let's consider the common point is here. So the common point between this to the common point between this, you can see the market here almost came to 0.38 level. In case if the market didn't retrace the price, what you could have plotted is that the retracement level of this candle over here. And if you plot this retracement of this candle, you can see exactly the market came to 4.26 level over here. So in whenever you don't find a very proper retracement to 0.38 levels, guys, you should always plot the retracement of this consolidation. So what you could have taken is a short position here, guys, after seeing this kind of rejection candle. So short position here, keeping your stop loss just above that VWAP level, and you could have targeted it all the way to 4.26 level. And after this, you can see the market headed higher. So the market aggressively showed some kind of bullish momentum, guys. So for the target levels in towards the upside, if you try to plot this retracement level here, the common point in this to the common point in this, you could see the market coming all the way towards this high, guys, towards the yesterday's high, I guess you can see. The market came all the way. So I'm not sure like how aggressively the market here, but you can see how the aggressive momentum, and again the market aggressively sold towards the downside. So this momentum is just to manipulate, guys, either buyers or sellers. So I'm not sure about what this kind of momentum is. So I never expected such kind of momentum. Better to stay away from that kind of momentum, guys. And you can see clearly the market again broke structure towards the downside, changing the market sentiment initially from being bullish to bearish. So if you consider this bearish momentum, guys, so if you try to plot the common point between this to the common point between this, you can see the market retracing to 50 levels, or you can consider this zone over here, the 0.618 to zero point 0.5 levels over here. The market retraced here, and immediately the market here formed a chop over here. You can see the chop here. So what you could have considered is that after the market showed some kind of bullish sentiment, guys, what you could have done is that you can see clearly the market here formed a chop over here and this kind of aggressive momentum. So in case if you try to plot the fib levels, the common point to this common point, you could have marked the 50 levels over here. You can see this is the 50 level base where you could have marked it. And in case if you find the support, you could have traded it towards the upside. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see exactly the market came all the way to this 100% move over here. This is the 100% move where you could have targeted it, guys. So keeping your stop loss just below this candle itself, seeing this kind of rejection of price from this lower levels, and you could have targeted it all the way towards the upside. This was one momentum, and again you can see the market broke the structure high here, again consolidated. So if you try to plot this fib levels over here, the low of this candle to high of this candle, you can see price taking support from the 0.38 level. So in case if you try to plot the fib extinction levels over here, the common point between this to the common point between this to the common point between this, so the market failed to make the 100% move over here. Instead, what you could have done is that after this kind of retracement, guys, you could have plotted the fib levels over here, the high to low of this candle over here, and you could have marked the 0.5 levels over here. In case if the market breaks this level, you could have considered taking short position over here. But it's better either if you may not have taken short position here, guys, you could have just waited for chop formation and waited for retracement. But here you can see the market aggressively sold towards the downside. So in case if you try to consider this whole momentum as one momentum, one single swing, and plot the fib levels over here, the common point between this to the common point between this, you can see the market rejecting price from the 5-minute zone, or this was inclining to 0.38 level. As you can see, the 0.38 level is an inclination with the 5-minute zone as well. So for target levels, what you could have done is to plot the fib extinction levels, the common point between this to the common point between this to the common point between this. So you could have targeted it all the way to this 100% move over here. And you can see this is the 1.68 level. So exactly the market came all the way to this level, as you can see. The 100% move, and you could have targeted the 1.68 level. You can see, guys, the 1.68 level. This is where you could have targeted it, keeping your stop loss just above this candle itself after seeing price rejection from 0.38 level and targeting it all the way to 1.68 level. So I hope you're understanding, guys, what I'm saying. This is my trade analysis, guys. Even if I try to decode even these trades also, let's try to decode, guys. So let's consider taking short position. And again, market rejected. You can see the trend line liquidity over here, clearly indicating market sentiment being bearish. And once if this candle which broke the 200 moving average, the 9 as well as 21 moving average, and the VWAP level towards straight downside, this is where you could have taken short position this candle over here, keeping your stop loss just above that candle. and targeting it all the way towards the downside. So this was one entry, guys. So for target levels, how could you have captured here? Is to plot the retracement levels here, the common point between this to the common point between this. So 1.68 level or any of these levels where you could have targeted it. And you can see after this kind of huge bearish momentum, the market again retraced, rejected price from this 200 moving averages over here and continued further bearish here, guys. So you can see clear break of structure towards the downside. A clear break of structure is, and if you consider the last up candle which broke structure towards the downside, is this candle over here. This is a 1 minute order block. We can see the market came, mitigated this order block, and here it rejected price and closed below this 200 moving average. This was another entry where you could have taken short position here, keeping your stop loss just above that candle. Or in case if you find this kind of huge bullish momentum, what you could have done is to plot the low to high of this candle. And once if this 0.5 level has been broken towards the downside, this is where you could have taken short position is after this break of this candle and again price retracing. This is where and rejection of price from this level. So you can see this is the chop formation. So this is where you could have taken short position and you could have targeted it all the way towards the low levels over here. This was another trade entry where you could have taken. This was one trade entry. So I hope you're understanding guys what I'm saying. So these are multiple trade entries in Nifty 50 as well. So in case if you find my videos helpful, guys, please like, share, and comment. Share with your friends and family as well. And please keep supporting my channel as well, guys. It would really help in my YouTube algorithm to go. And in case if you find my videos helpful, and if you want to keep in touch with me, please message me over Instagram, guys. I would be glad to respond to you. And if you want any learning material from me that where exactly you want to learn, I would be glad to help you and everything regarding trading. Whatever you want, you can message me over there. I would be glad to help you guys. Thank you.